Experts have called on the government to initiate complementary actions, I beg your pardon, to cushion the impact of hardship created by the ongoing economic reforms. While speaking to TVC News on the sidelines of the Nigerian-Indian Business Forum in Lagos, the experts say the changes intended by the economic reforms may take a little longer before Nigerians can begin to see the results. Frank Omalape has more.
The recent economic reforms in Nigeria, including the foreign exchange liberalization and fuel subsidy removal, have led to inflationary pressures in the economy, particularly in terms of increased cost for businesses, prices of commodities, and higher transportation costs, causing hardships for many Nigerians. While there's a growing demand for actionable measures to address the socio-economic challenges stemming from the ongoing reforms, experts are of the view that those reforms may take longer than expected to deliver the needed result.
These reforms will take some time to begin to produce results. The general estimate was that it would take about 9 months to about 1 year until we begin to see the benefits. Whether it is the removal of fuel subsidy, whether it is the convergence of the exchange rates, it will take some time for the economy to rebalance.
A lot still has to be done to bring confidence. At the NSG, we think that an economic stabilization plan and framework that provides forward guidance to investors and businesses through a set of well-packed, well-sequenced reforms is the way to create stability.
While proffering solutions to tame the current economic hardship facing the nation, these experts agree that there's a need for coordinated fiscal and monetary policies in the short to medium term to stabilize the economy and create a more conducive environment for growth.
Address the issue of the level of our security architecture and ensure that there was a fast-track constitutional amendment that brought in policing at federal, state, and other subnational levels. Perhaps the security that is causing the food inflation may not be as high as we have it now.
Fight for economic stabilization, especially stabilization in the macroeconomic indicators. Fight for forward guidance, clear, comprehensive forward guidance, so that all business leaders navigating business can understand what's coming, plan for what's coming, and then we manage that out together. And I think if we do that, then we can move quickly from stabilization to consolidation, and we can accelerate the economy in the medium term.
As Nigeria navigate through this period of economic transformation, it is expected that policymakers must prioritize the implementation of targeted initiatives towards the most vulnerable and measures to address structural issues hindering economic growth. Frank Omalape, TVC News, Lagos.
Meanwhile, the Group Chief Executive Officer of the Nigerian National Petroleum Company Limited, NNPCL, Mr. Mele Kyari, says the final investment destination on Nigeria-Morocco gas pipeline project will take place in December 2024. Mr. Kyari said this during a leadership dialogue session at the ongoing CERAWeek conference in Houston, tagged multidimensional energy transition, markets, climate, technology, and geopolitics.
There's an ongoing engagement and in a very advanced stage at a field level to create a pipeline that will pass through 13 African countries into Morocco, then jump into Europe. What that will do will create integration among the African countries, a number of countries that do have gas resources, so that collaboration will enable them have access to those pipelines. And our estimate is to see a $25 billion project, clear line of sight around financing for that project.
25 billion.
21 billion for that line. And then the alternate route is to pass through the center of our country all the way through the Sahara into Algeria, then into Europe. And the reason is very clear, quite is practical. We do not have issues around availability of the gas resources, so it's there. And of course, we also understand that maybe a little slower, but surely much cheaper process of transporting gas across the region. The Nigeria-Morocco gas pipeline is beyond planning. I think we hope to see FID by the end of the year, about $25 billion.
Finally, in business news, the stock market has come down again in response to trade losses due to profit taken by investors. Effiong Cup report will be back with football tonight.
3 days consecutive trades in the lower territories depressed the stock market as shares prices dropped for market corrections. The trade index dipped by 0.28%, emphasizing losses on investments. The shares of First Bank Holdings were most affected by down prices as the stock lost nearly 5% in value. Manufacturing company Beja Paints, FCMB, Access Holdings, and ICO Insurance all closed deals in red. Marginal trade gainers included oil marketing firm Etana, Computer Warehouse Group, C&I Leasing, Keveton Aviation, and technology stock Jams. Outside Nigeria, many African exchanges traded in green. The stock market in Nairobi, Kenya, rose in volume of trades and market cap by 2% on the back of renewed interest in companies' equities. The JSE in South Africa equally enjoyed support from fund managers, especially those who played in the housing markets. Back in West Africa, the Ghana Stock Exchange recorded trade upsurge calculated at almost half of a percentage point. Investors' interest crossed banking and insurance securities. Ifyong Ekop TVC News, Lagos.